Hello, everyone, and welcome to another edition of the technical Forex market update for June 18th, 2015. I hope you are all doing very well, and the markets, we have been seeing some movements in the market. Yesterday, we had the Fed interest rate decision that created some volatility in the markets. Taking a look at the euro, look on the 15-minute chart. We see that this is an actual candle here. The market spiked up to 113, just shy of 113.20, and the low was just above 112. So we had a pretty volatile time after the announcement, directly after the interest rate announcement. And then what happened in the US dollar pairs is that the market continued to rally, and this rally has continued to today. So we are in a pretty nice uptrend here on the 50-minute chart with respects to the euro. The daily picture, we see we're still in this consolidation pattern that you can see here. If we redraw the old trend line, we can see that the downside momentum in the euro has definitely dissipated because we have broken that downtrend line. So the next area of defense on the euro is at this trend line here, the second trend line. This is the area of defense on the euro. If we break above these levels, then that will confirm the turnaround, and we could see a rally up to 118 or even 120 in the near term. So that's what's happening in the euro. On the short term, we are currently at trading just above the monthly resistance number at 113.65, and the weekly R1 is at 114.01. And then this trend line resistance comes in at 114.50. So this entire area of resistance, this entire area here, you'll find sellers lined up and could act as resistance in the euro, this entire area here. If we break above this area, that will signal to me that the bulls are firmly in control and we're in for a larger pullback. But for you short-term momentum players, definitely look at this area as resistance. Taking a look at the British pound versus the US dollar, we continue to rally, and we said that for our members we were long this market, and this market continues to make gains for us. And the market yesterday, after the announcement, took out the all important level here near this 158 level. This area of resistance was taken out, and as you can see with this head and shoulders pattern, the market is currently breaking out of this neckline resistance here. So we want to continue to watch the British pound. We are in a profit of over 100, and profit is probably 154. Over 250 pips up on this trade alone in terms of profit, depending on when exactly you entered. But the average price was probably about 154, in the 154 region, and we're up nicely with this British pound pair. Another pair that's doing very well is the British pound Japanese yen. Huge up day yesterday. The market rallied quite significantly and is just pausing today from this low. And my thing is that I always speak about 900 pip moves, 1,000 pip moves, 2,000 pip moves. Well, this market bottomed in the 175 area, and we are currently up to 195.21, and that's over a 2,000 pip move in just over 2.5 months in this British pound Japanese yen. No, we did not, and this is a lesson on trend trading. No, we did not get in exactly at the bottom. We got in near the bottom, and we are still in. So we have captured the majority of this movement so far, and the market continues to move up, so we continue to stay along this market. Taking a look at the British pound versus the Australian dollar, the market is pulling back sharply this morning as the market broke the all important resistance a couple of days ago and is now pulling back. But if you're long this market, it's a wise idea to stay long. If you're position trading long, it's a wise idea to stay along this market. Japanese yen pulling back, and I just want you to note that the market is currently pulling back just shy of this 50% retracement level from the swing low at 119 up to 126. So look for this 122.36 area to act as support in the Japanese yen. If that support is breached, the next area of support will be 121.54 and 120.36. But before we go, let's just take a look at the bigger picture in terms of the US dollar. We have broken this uptrend line. The market came down, up, made a new low. This high failed to go above this high, and the market could now potentially break down into a new low. So that will definitely signal a turnaround in this US dollar index. And that's why it's important to read the direction of the markets. I know a lot of folks flood the market or their charting packet with a lot of indicators, but price action is actually the best indicator that you can use, because price action shows you what the market is doing. And if you have any doubt, let's take a look at the British pound. I mean, what's the price action telling you? This was the past price action, and since April, what the price action is telling you, it's telling you that we're in an uptrend. British pound, Japanese yen, the price action is telling you that we're in a clear uptrend. I mean, look how long this uptrend has extended. So which side of the market you should be on if you are swing trading and position trading? The answer is to the long side, because this market is in an uptrend. So price is definitely your most important indicator when you are trading the markets, because it tells you what the trend direction is and where a market is more than likely to go. Because if this market is in an uptrend, it's more probable than not that this trend will continue. A lot of money has been lost trying to pick the tops of these markets. And so I would suggest that you continue going with the trend rather than fighting the broader trend. Now, if you like to have these trades directly copied into your trading account, I urge you to click on the link below this video. We're going to be entering some new markets in the next couple of days to a couple of weeks, and that are poised to make 100 pip, 300 up to 500 pip moves in the next couple of weeks. And we're looking at some markets, for example, euro versus the Canadian dollar. We're looking at some New Zealand dollar setups that are looking fairly promising. So click on the link below to get started with the trade signals, so you can start profiting from the Forex market as soon as possible. Thank you very much for listening, and until tomorrow, this is Beyond. Have a good day.